Welcome to the London Outlook for Thursday, the 21st of December 2023. As usual, starting off with the economic calendar, what you can see is there is no red folder news for the London session. There is, however, significant red folder news for the USD, or rather the New York session. Essentially, with regards to GDP, it's considered a significant red folder news event, and as a result of this, I'd probably want to close any trades I take during the London session around the start of the London lull. I certainly don't want to have any positions open upon the USD news release. Once the USD news is released, we can then fade the news accordingly. But yeah, I don't think it's a good idea to leave any trades open. Yeah, I think that's just how I'd approach it, specifically because of GDP. If it wasn't for GDP, then I'd be more open to actually leaving trades open or even letting a trade be triggered by the news release. Yeah, so essentially that's the economic calendar. Jumping into the charts, starting with the 4-hour, we are still in this confirmed bullish market structure trend or bullish market trend. Um, Nothing really has changed since yesterday except for where we're currently operating from. So in terms of actually trading, long bias is still the primary objective for today, and that's because we have indeed validated this primary leg, not because we reacted to a 4H Pro Trend OB, but more so because we broke substructure OB level to validate or indicate that demand is actually in control on the 4-hour, which is how we identified this 4H OB as a result of this primary leg. Something that does need to be pointed out is the fact that we have swept this primary leg extreme, and what this essentially means is that we can build a new primary leg on the 15 and 5 minute, or even the 30 minute for that matter. My usual time frame is the 15 minutes, so that's what I will be referring to. And essentially what you can see is that last night, or just before the close of the New York session, you can see that we actually put in the low of the day, wick the 4H OB extreme, and that's where I was saying we can validate a new primary leg because we actually reset it right here. So now in terms of actually trading for the day, we have two options for our fib level. We can either use the previous low of the day and the current extreme to anchor our fib, or if the day actually validates an extension of this primary leg by a candle body break of this level, we can then use the high of the existing current day low of the day, which would be this Asia low of the day right here. Perhaps I'll just mark it out quickly, which would be that, and then we can maybe anchor our fib to something like that. However, what I do want to point out is the fact that this low of the day and the previous low of the day are close enough to actually just use the low of the day as an anchor point. Remember that also we only have a singular directional bias, and in that case we could actually use the 11% level as our stop loss instead of actually needing to cover this extreme low of the day. So yeah, so I think that's pretty much the outlook. Longs remain the primary objective and bias. And it's simply about positioning yourself. I think in terms of actually having any trades open for the morning, I'd probably have a trade open right here, simply because we have to take into account Asia range liquidity. If we do indeed break out of the Asia range and extend the primary leg, then I'll consider an OB inside of here. If we look at it just how it is presently in terms of actual liquidity in the leg, provided that we actually extend this, then our options for liquidity in the leg is probably this level. However, if we don't extend the leg, then our options for liquidity in the leg are quite limited, because everything's pretty much has already been liquidated. This was our last liquidity in the leg that's been taken, and now we're going to the upside. So not ideal, but valid nonetheless. But like I said, in order to actually take a trade right here and position ourselves correctly, we probably will actually get a break of this level. In terms of liquidity in the leg build to the right, given that this is the extreme, we actually don't have much of an option for liquidity in the leg build to the right, as we would need a body break of this, which would then likely mean that we actually get a body break of the extreme, and then this would indeed be valid liquidity in the leg. But yeah, you can essentially position, let's assume that we do indeed break this, we can position ourselves probably somewhere here, and just cover the extreme or the low of the day. It's not that large of a stop loss, so I'll probably just cover the extreme, knowing that if I am wrong, then I'll be wrong once. But overall, I'd say that brings me to the end of the London outlook for today, and we'll chat again for the New York outlook.